Welcome to the Full Tracy Money Audio Commentary. This is Owen Tracy recording, and it is 3:18 p.m. and that is Central Time. And today is February 2nd, and I arrived back from Australia this morning. So, absolutely wonderful time over in the Antipodes, but also very glad to be home. Now, when we look at what's happening in the markets, I think there's a big question here, and it's about the dollar, because the 2-year yield was up 5 basis points today. Now it dipped quite sharply on Friday and it's rebounding in here today. It's still below the 1,000-day moving average, and we can also see that blue line, which is the 200-day moving average, continues to trend downwards. And there's been a succession of lower major rally highs since the beginning of 2024. And one of the biggest questions in the markets is whether we're going to have a range, a decline, or an uptrend in rates. And the more back history you look at, it feels like the easier it is to answer that question. Because when we look at the 2-year yield over a long, long period of time, then it really does look like the downtrend has been broken. It's also, though, worth considering that it looked like the downtrend had been broken on several other occasions as well. So, for example, when it was trending downwards from the peak in 1981, it accelerated downwards from 9.6 to below 4 in that period from 1989 through to about 1993. That was an epic decline in rates. And then we had a really sharp advance. So it went from 4 to 8, and at that point, I think it would have been reasonable to conclude that perhaps the lows were in. And then over the course of the next 3 or 4 years, the yield had just gone sideways. And I think a lot of people would have concluded that this was a base formation. And it looked like a base formation all the way through until about 2000, and then it broke downwards again. And then it looked like a really substantial rebound had taken place between 2003 and 2006. There was lots of reasons for thinking why yields would be going up at that point as well, because there was the aftermath of 9/11, there was the massive spending in Iraq and Afghanistan, and the USA was no longer running surpluses. We have to also consider that one of the reasons why yields had come down so much was because the USA